Okay, let's go, people. Let's go. Okay, now, lovely. Now, I want to start sharing my screen now. Then I will explain. I will explain what I want to teach you tonight. Are you ready? Okay, let's go. Okay. Can you see my screen, please? If you can see my screen, give me a 111. If you can see my screen, give me a 111, please. More 111s, let me know. Now, for those of us that are just joining, please mute yourself, please. Now go to the please, let's go to the WhatsApp page. Everyone follow the WhatsApp page and write, we are live on Telegram. We are live on Telegram on the WhatsApp group. Let's write it there so that everybody will know that we are live. Today is very important. We are live on Telegram because we're about to share some wonderful secrets that will help every one of us here. So let's go live. We are live on Telegram. Let's go to the WhatsApp group and write, we are live on Telegram. Join us now. We are live on Telegram. Join us now. Let's write, we are live. We are live on Telegram. Join us now. Join us now. Okay. Okay, now. So let's go, people. Now, how to trade without blowing your trading accounts. Number one reason why people blow their accounts. Number one reason why people blow their account is fear of losses. Fear of losses. Now, many of us, because of our fear of losses, we tend to take wrong decisions when trading. The fear of loss may take wrong decisions when trading. Many of us, like this one I'm teaching you now. This one I'm teaching you now. It will make you enter trades with little stop loss, but with higher returns on your investment or your trading. But many of us, if for example, you understand what I'm talking about when I start teaching practical terms and showing you from the charts and everything. See, losses, please type on the group chat, on the Telegram group chat. Losses is part of the Forex business. Losses is part of the Forex business. Yes. Now, listen. If you are conversant with the online space on Forex, you see most people will be posting results blues without red. It's a fallacy. It's a fallacy. The truth is this: your goal as a trader is to have more blues than reds to be profitable. There's no business in this world. There's no business in this world that there'll be no days of losses. There are some days you have losses, but what is important is that your losses, your profit should be more than your losses. So many of us get demoralized. Many of us get this mindset of we want to revenge. Many of us, for example, you are trading and your first trade was a loss. Second trade was a loss. Third trade was a loss. Then you say, by all means, I must get back my money. Before you know it, the market will swallow all your capital. that mindset of wanting to revenge and get back your money is one of the greatest reasons why people blow their accounts. Now, number 2 is poor risk and money management. Now, I will explain this. Now, please, if you are not mathematically inclined, you can still get this. Just follow me. Now, it's not rocket science. It's sweet. It tastes like chicken. Now, let's see. Now, please follow me. Lot size 0.1, which is the least lot size for currency pair. This is the least lot of currency pair. The dollar value of lot 0.01, the dollar value is 0.1. Why? For lot size, please write this down. Oh, lot size 0.10, the dollar value for 1 pip. Sorry, I will add that now. The dollar value for 1 pip, we are going to solve this together, is $1. If you are seeing my screen, give me a 5 on the chat, please. For lot size 1, okay. I need feedback. If you are seeing my screen, give me 5. For lot size value 1.0, the dollar for 1 pip, what checks you is a very serious secret why people blow accounts. That if you understand this, the blend of accounts it will become an history for you. So the dollar value is $10 now, and so on and so forth. So let me continue. Lot size. I'll stop at 10.0. So the dollar value for 1 pip, dollar value for 1 pip is $100. Now that's how it goes on and on and on. So every time there is when price moves in your direction by 1 pip in your direction, if you are using 0.01 lot size, that means you are gaining $0.1. If price moves in your direction in your favor with you're using 0.10 lot size, it means for 1 pip of currency pair, you're getting $1. So if price moves in your favor by 1 pip and you're using a lot size 1.0, you are gaining $10, and so on and so forth. Why is this very, very important? Now listen, it is generally accepted by profitable traders that you are to risk for each trade position you enter. It's accepted that you are to risk. You are to risk only 1 to 2% of your capital for each trade position you enter. For each, please follow me, you will get this. Each trading position you enter. Are you please? If you are still with me, give 777. If you are still with me, give me a 777. Let me know that I'm not talking to myself. Hello. If you are seeing my screen and you're with me, give me a 777 in the group chat, please. Okay. I need more 77s. We are more than 5 people here. Okay. Thank you. Now look at this. Now, number one, many of us need to realize, many of us, mostly people that are new to trading, you will hear something like this. They'll say, sir, please, can I start with $10 just for a start? I always laugh at those kind of people that, what do you mean by start with $10? If you say start with $10, 1% of $10 is how much? Please, on the chat, tell me 1% of $10 is how much? 1% of $10 is how much? Let's go, guys. I want to know. 10%, 1%, 1% of $10 is what? 1% is $0.1. Yes, $0.1. Thank you. Now, according to standard risk management that you must practice from today, if you are to ever become profitable and not blow your account, is that means if you're using $10 account, every trade you want to enter, your stop loss should not be above $0.1. Then I will show you the value in pips very soon. But now, let's give let's use an example that's realistic, that makes sense. That you should, if you are to start trading, let's just assume, which is not really, but let's just assume that, okay, probably you are a newbie and you want to start for the first time. Let's say, for example, you want to start trading, for example, you want to start trading now with $10, with $100, sorry. $100 capital, for example. Now, let's say you for so that you have you give your trade some breathing space. Let's say you use let's say you use 2% of your capital for each entry. 2% of your capital for each entry. So 2% of $100. Now, for those of you that thought that Forex was gamble, can I say it's not gamble? This is like a school. You are learning. This is like a school. So for the few of you that thought it was a scam or gambling, it's not gambling. No, yeah, it's like a school. As you can see, this is like academic work, but it's not academic work like that. It's just, it's interesting. It's just like chicken, Now, give me the answer. 2% of $100 is what? I did answers, please. $100. Give me an answer in the group. Follow me. I need your feedback, please. Everybody answer. 2% of $100. Give me an answer. Everyone, get involved. Mr. Gichiru, listen. In mathematics, if you don't put a unit to a particular number, it makes no sense. So you must put a unit. It's either centimeter or something. Thank you. Others, come on, guys. We are not spectators here. Everybody's involved. We are all learning. Everybody's learning. We are working together. We are all learning. What's your answer? 2% of $100. Because this is what you start doing from now. Okay, $2. Lovely, $2. So, $2. Now, what this means is that for every entry, every position every trade you want to enter now, you must your stop loss will not exceed $2. Will not exceed what? $2. Your stop loss must not exceed $2. Using this scenario, must not. exceed this amount. That's $2 for this scenario. Are you seeing this? Now, I jumped a step. Let's backpedal a bit so that you follow me now. Now, for 100, please look at this. For $100 account, which is the minimum recommended, for another account, your lot size that is acceptable is lot size equal to your capital divided by $10,000. So for a capital of $100, it will be what? $100 divided by $10,000. This gives you the standard lot size you ought to use. So $100 divided by $10,000. What would be the lot size, please? What would be the answer? Write on the group, please. Give me the answer. Awesome. More answers. And please, guys, be working this out. Be giving me the answers. We are interacting, guys. This is not a lecture. This is an interactive session. Let's go, guys. Let's go. Okay, let's go more. So 0.01. So now this 0.01 is what we call low risk, and this is the best thing you need to do, guys. Low risk trade, low risk lot size, low risk. And really, if you have the $100 account, this is what you ought to be using, guys. Don't be using 0.10. If you blow, this is what you ought to be using. For a $200 account, if you have $200 in your account, what will be your lot size that you can use? Now, let's continue now. So what will be your lot size? Who can tell me? For $200 account, capital divided by 10,000 will be 200 divided by 10,000. So, guys, what will be your lot? What will be your lot size? Talk to me now. 0.2, 0.02, 0.02. Yes, correct. Are you seeing this? Now, let me shake your brains a bit. For a capital of 254, what will be your lot size? Your lowest risk lot size, what will be? If your capital is 254. I will call somebody now that has not answered any questions since. I will call your name out now. If you don't answer me, I will call your name. I will check out your name on the group and call your name if you're not answering me. 254, what will be the lot size? Okay, lovely. Now, lovely. Engineer Nick, you said 0.25. Mr. Victor, you said 0.00254. Wonderful. Can you see why you must do the work so that you will understand yourself? It's 0.0254. Now, of course, this particular kind of lot size is not available for most brokers, except you're using a broker that has a micro account. So for a broker that has a micro account, but for most brokers, there's nothing like 0.025. So you can round it off to like 0.03, but it's not advisable. We only advise that you continue to use the word 0.02, 0.02, 0.02. So let's do for the last one now. For a capital, a trading account that has $1,250, what will be the lot size, guys? Give me the answer, guys. I'm waiting for your answer. Okay. 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 So you see. So 0.125. Now, who can tell me, what did you observe? What did you observe? What did you observe that what determines your lot size is actually your capital? Did you observe it? That what determines your lot size is your capital. If you understand, if you have observed it that way, give me a 111. If you observe that what determines your capital is your lot size, give me 11. If not, give me 000. Okay. So can you see? Awesome. So, in other words, those of you that you are in the habit of you want to blow overnight, it's not like that. Yes. Now, so let's continue with our maths. Now, having known these parameters now, let's continue from where we stopped. Now, look at this point. I look at from here, we said, so for a lot size 0.01, the dollar value of for 1 pips, that means when price moves 1 pip, is you will get $0.1. If you move against you, you will lose $0.1 for a lot size 0.01. For a lot size 0.10, dollar value for 1 pip is $1. So now let's come here now. Let's use this example of you having $100 capital. Let's say you determined to use 2%. We said your stop loss will be now what? $2 here. It should be $2. 2% of $200 is $2. Now your lot size. Now we said your stop loss rather will be $2. So what is the pip? What is the pip? Number of pips that we determine that we give you $2. To know the number of pips, you will set number of pips to set your trade. When you're about to enter your trade, you will number of pips to set. You will now do what? Your calculated stop loss, calculated SL in dollars, divided by the dollar value of 1 pip that corresponds to your lot size. Guys, if you understood what I just wrote, give me a 555. That the number of pips to mark out, that means by the calculated SL in dollars divided by dollar value of 1 pip that corresponds to your lot size. Okay, awesome. So now, the number of pips now that will determine your lot size, number of pips will be equal to, using this example, $2 divided by 0.1, which will give us what? 20 pips. 20 pips. So in other words, if you have $100 account, if you have a $100 account and you are using 2% as your risk for each trade, or when you want to enter a trade, your stop loss should never be above 20 pips. For you to safeguard your account, your dollar value should not be above, your stop loss rather should not be above 20 pips stop loss. Anything above 20 stop loss, you ignore that trade. You must only look for trades that have a stop loss of 20 pips. The one that has higher one, that we impact your capital mass negatively, you look away. Now, with this, for example, now look at this. How many trades will go against you before you can blow your $100 account? If you're using this, if you follow this rule strictly, how many trades will have to go against you for you to blow up your $100 account? If you follow this example of using 2% of your capital as your stop loss for every trade you enter, how many trades will go against you for you to blow your account? How many trades? Guys, tell me on the group. Hey, I you get yourself. 20K. Guys, let's go. 50. Yes, I need more answers. I need more answers. I need more answers. Mr. Bob, Mr. Victor, Wolf Trader, Cornell, Brian, Pomtech, Justus, Edwin, please. Let's go, guys. Tell me. 40. Okay, Mark. Let's keep going. I need more feedback. Now, see, listen. We said for each trade, your risk is $2. Your risk is $2. You have your capital is $100. So how many trades will you enter before you can blow up your $100? You need to enter at least 100. That means to get the number of trades you enter, you blow 100 divided by what? $2, which will give you 50 trades. And come to think of it, how can you enter 50 trades that will go against you? It's not the probability is very, 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 very low. So you see now, with most of you here that have traded before and stopped trading, what happened to you? You traded and in a week you blow up $100 account. So a few $1,000 account. So a few $800 account, $800 account. So a few $15, some $10,000 account. Why? Number one, the reason why you blew that account, you were using big lot size. You wanted to make money overnight. I need to say this here. The second point after fear is number 2. Here, why people blow account? Forex is not a get rich quick scheme, but it is a get sure rich scheme. That means if you give yourself to learning forex trading, you will come back rich. The day, I don't know, but surely if you give yourself to it, it will pay off at the long run. So forex is not a get rich quick scheme, but rather it's a get sure rich scheme. Please type on your group, on the group or the Telegram group, forex is not a get rich quick scheme, but a get sure quick scheme. I'm waiting. Forex is not a get rich quick scheme, but a get sure get sure rich scheme, or rich score sure scheme, any way you want to put it. Okay. Now, guys, let's do something before we. How many of you? And please write. Tell us. Write on the group after you have done this. Now, right? Those of you that have traded before and stopped trading. How much? What is the highest amount you have ever blown trading? Write it on the group now. Let's see. How much is the highest amount you have ever blown as a trader? Write it on the group chat. The highest amount you have blown. Guys, let's go, guys. Let's go. Victor, Wolf Trader, Cornell, Richel. If you have traded before, you have blown your account, the highest you have blown, $200. Oh, that's wonderful. Okay, Victor never traded before. Wow. Mr. Edwin, $2,000. Wow, wow, wow. Sorry about that. But somebody once said, $100, okay. Somebody once said that if Forex took your money, Forex will give you back your money. I hope you believe that, Mr. Edwin. And I'm telling you that categorically, that if Forex took your money, Forex will definitely give you back your money. $100, okay. Yes, yes, it will. It will. It will. Without doubt. $20. You use the stopwatch. How did you know there's 10 seconds? Use the stopwatch to check it. It's amazing. How did you know it's 10 seconds? Please, you cracked me up. How did you know it was 10 seconds, sir? You use the stopwatch to check it. Very funny. It's 10 seconds. I think I have to laugh too. Okay. Okay, figured it out. Awesome. Okay. Now let's continue. Now look at this. Now, that's why we're having this class tonight. Very important class. Now look at this. Now using the same example of $100 now. The example of $100. Let's use the example of $100. Now let's assume you are trading EU USD. Now you are trading EU USD. Now let's say you in a particular day, please watch this. Who is unmuting himself? You are disturbing our class. Who is that? Okay. Now, let's assume, for example, you have. Now, please follow me. Now, we believe that you have learned this rule. Now, let's say you are following the rule now. Now, you enter trade for a particular day. You enter 10 trades. Let's assume you enter 10 trades on a particular day. 10 trades on a particular day. A particular trading day. Now, out of these 10, 6 of the trades were losses, while 4 of the trades were profitable or profits. Now look at this, guys. If you are following this rule strictly, and you have, for example, you have $100 account, I want to show you something. Now, remember we said for each lot size, for each entry, you're using $2 as your stop loss. So that means for the 6 trades you lost, it will be what? 6. That means you lost $2 for each of them. To be 6 multiplied by $2. That will equal to $12. Am I correct? Then now let's say this. Look at this place. That's what they call in trading. RRR. RRR means reward to risk ratio. Reward to risk ratio. What this means basically is that as you are risking this your $2, as you're risking your $2, you are targeting to get, say, times 3 of it or times 2 of it. So in RRR, we recommend that you use an RRR of 1:3 minimum. You can use 1:2 or 1:1. It depends on you, but minimum so that you get profit. This is what profitable traders use. That's what I use. 1:4. You can use 1:5, and so on and so forth, etc. Now, what this means is this: as you are risking $2, your target, you are risking $2. Your risk $2. That means if market goes against you, you will lose $2. But your target profit, where is this? Your target profits, if you are using RRR was 1:3, your target profit should be what? $6. Is that true? If it is true, please write through on group chat. Okay. Thank you. Now, if you are using an RRR of 1:4, what will be your profit? Your profit, your target profit? It what, Mr. GQ? I've told you, learn to put units to your value. Other guys, please. Okay, thank you. What will be, if you're using an RRR of 1:4, what will be your value? Mr. Cornell, I'm not getting your feedback. Okay, thank you. So, yeah, thank you very much. So, can you see now? Now look at this. Let's assume for the particular trade, your RRR is 1:3. So if you had 6 losses, then you got four profitable trades. That will be 4 times. Remember, your profit now is times 3, which is 2 times 3. That is $6. So now, 4 times $6 now, you will see you have about $24. Now, look at this, friends. Although you had more losses, look at it. More losses, you lost 6 trades, but overall, you were in profit. Overall, you were what? In profit. Did you see that? Though you lost 6 trades, but overall you were in profit because you were following a proper risk management. So, but most of us, you know what we do? We will go and put a very large loss size, believing that price will reverse. It will reverse. Even some of us, while we blow account, we adjust our stop loss. We say price we trust the price will reverse now. Hey, let it hit your stop loss and re-enter again is better. Please write on the group chat. Hit stop loss, re-enter again is better. Hit stop loss, re-enter again is better. Yes, it's better for you to hit your stop loss and you re-enter again than most of us. If you remember how you lost your blue account, so of course even we did not put stop loss at all. Of course, by now you should know that you must put stop loss in every trade. After now, every trade, every time you enter a trade, you must put stop loss. In fact, there was one time I asked on a Facebook group, what should you enter first after you execute your market? The next thing you should enter first, I asked, is it your TP or your stop loss? And most guys said stop loss. See, listen to me. Capital preservation is far better than profits. Capital preservation is far better than profits. How do I mean? You see, most of us, we don't know that it's only when you have capital still remaining, you can still enter on that trade. If you use only your capital for a particular trade only, you didn't put your stop loss, you adjusting your stop loss, you will never have the opportunity to trade another time. Your account will be blown. So you should not adjust. You should not adjust your stop loss. You should not adjust your stop loss. You should not. Yes, live to fight on that day. Yes. So what this means now, for those of you that have been blowing your account, number one, you have been, maybe most of you would have used a huge lot size. They have told you, maybe the person that told you, say, this is a short trade call or a short market. Enter with a big lot size. After entering, the market big lot sized you, and now your money gone. For some of us, we did not put stop loss at all. We just entered the trade and held our phone looking at the movement, and the market came against us and took us out. These are some of the reasons why we have blown our account. Yes, huge loss size is catastrophic. Yes, I've explained that now. Now, the final point which I want to talk about tonight, and the other ones on this, is to be profitable in forex trading, think in terms of percentages, not in numbers. Think in terms of what? Percentages, not in numbers. Now, what do I mean by that? Now, if you have $100 account, for example, think how to grow this $100 in percentages. Now, for a RRR of 1/3, that means you are risking one. For example, if you're using 1% of your account, you can say 1% to get 3%. Yeah, now, if you're using 1% of your account, that means you're risking $1 to get $3. But don't think in terms of dollars. Many of us, the reason why we blow our account, we are thinking in terms of dollars. Oh, today I grew my account from $100 to $200. Hey, everybody will hail you. You hear your friends say do giveaway. You say take the guys out for a party. Another. No. Listen, forex trading is a business like any other business. You think in terms of percentages. Now let's go, guys. If you are making 3%, for example, 3% of your what do you call this thing, of your capital daily, for example, $100, 3% of $4, that is $3, for example, day one. Now the next day, of course, it has become 103. Now, so 3%, excuse me, please, 3% of $103. How much is this, guys? What will be this? What will be the answer? I need answers, please. I need answers. 3% of 103. No answer. So 3% now. You add now, of course, for that they add this one now to this, to your 103. If you add it to 103, that it will become 106. 0.09. So do 3% of that too. Is it 1.39? It's not 3%, sir. 3%. Sorry, 3%. This is the answer. I'm correct. So 31827. 31827. So now think in terms of percentage, guys. Now, then continue. Now that the next one will be like this. Now, this is each look at how you're growing your account gradually each day in terms of percentages, not in terms of money. You're thinking in terms of percentages, and your account will be growing steadily like that. Okay, this is we 110. The 110 or not 9. So guys, help me out. Oh, I'm using my eyes to check it out. 2727. So and like that, and so on and so forth. Now, okay, you got it. Now that's how to continue. Now look at this. Now this for this like all these ones now trading for day 1, day 2, day 2, day 3, day 4. Now look at this. If you are thinking in terms of numbers, you might think this is small, but it's not. If you continue this way 3%, before you get to 30 days, continue this way, you might have gotten up to $200. That means if you calculate it in 30 days, it will be almost $200, which is 100% of your capital. Now, I want to ask a question. Which business ever gives 100% of the capital over in 30 days? There are few businesses that do that. Even if you, for example, if you know about bonds, if you know about bonds, stocks, and the likes, the highest they can give you is 11%. Highest they can give you is 11%. So the highest they can give you is 11%. And treasury bills 9%, 8%, all those stuff, and it's per annum. But this now with Forex, and you are following this percentage rule, you will get your capital in less than in a month, 100% of it. Now, if you are still with me, give me 5 by 5. If you are still with me, give me 5 by 5, please. If you are still with me, give me a 5, 5, 5, 5, 5, 5. Okay. So I want to ask, Do you still fear with what you have learned this evening now? Are you afraid of starting trading? If you're not afraid of starting, you're not afraid of starting trading, say, no, I'm not afraid. We will come to that. Okay. Okay. Thank you, guys. Thank you, guys. Now, market analysis. Cornell, see, I want you to understand there's no strategy that is wrong. The greatest problem of people that make ends meet from trading and those that don't are your psychology. Trading reveal the kind of person you are. Trading will reveal you to you. If you have a good psychology, no matter the strategy you use or how you analyze the market, whether you're a fundamental analyst or technical analyst, you will still come up with a profit if you follow this risk and money management rules we just outlined this evening. Yes, I will copy it out now. I will send it to the group now. So no matter what the kind of market analysis you make, if you understand this, what I just explained this evening, you will do well. So that's the copy of this the analysis. Now, as you can see, now, so this evening, I'm coming. Let me stop sharing my screen. I have my student I want to teach one-on-one class. I want to teach him now. Saudi 8. So now this yes. So now this night, I want to give an opportunity. Not everybody, it's not anybody. But if you feel like, okay, what you have learned thus far, you think you want to take it a step further and really, because see, the truth is this, I cannot teach you everything on Forex in 3 days. I have to compress everything. But if you feel like, okay, you have been afraid of taking trades before because of this and that, but you now want somebody that will hold you by the hand and help you start this journey. So I want to start from August 1st. I want to start a 30 days challenge. Now, these are the details below. If you are interested, it's not compulsory. No, it's not compulsory for anybody. If you're interested, now just check out the terms and the conditions. Then if you are interested, you just send me a message, a private message. Then we take it up from there. So if you are interested, because I cannot finish all this thing. Actually, this whole course is like a 14 days course. I try to compress to 7 days. So if you are interested in completing the because I cannot finish all, that's the absolute truth, then you can tell me up and we take it up from there. But for this night and for this boot camp, I want to appreciate every one of you for turning up. Those of you that sent the flyer, invited friends and all that. I appreciate you a lot. So if you're interested, send me a private message on WhatsApp or on Telegram. I will respond to you. Then we take it from there. Any questions before we call it a day? I have a class with one of my private students now, please. Any questions? If you have questions, please drop it quickly. I have only 3 minutes. Please be fast, please. I don't want to keep him waiting. Mrs. Rachel, it's not safe, because no matter how robots are garbage in, garbage out, they are programmed, and market sometimes does not respect them. For example, a news, mostly in currency pairs or stock in this other thing, it can scatter the configuration, the ideology of a robot. The robot cannot be like a human being, like you trade by yourself. Okay, yeah. I have a video on that. I said it now. I have a video on that on my YouTube channel. Go to the message, you will see I just uploaded that video not too long ago, and it's there. You can check it out. You can check it out. And if you're interested in knowing further, you can just private chat me. So guys, it has been great having you. So I will try and upload the videos after editing it. I'll try and upload the video after editing it. Then I'll pick it up from there. So for me, it's good night, and thank you for joining these classes. Bye for now.